This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, nononsenseforex.com, and podcast players everywhere. Episode 188 is brought to us by Bybit. We talk all the time on this show about how important yield is, even if it's a very small amount. But with Bybit, when you trade, you always have dry powder somewhere, and you can take the tether you're not using and park it right there on Bybit and get over a 10% yield on it. Now, of course, it makes more sense to deploy it right back in the market when you get a signal, but if you're not using it, at least get paid for not using it, and Bybit does that too on top of everything else. I'm going to mention this in the blog, which you can find down below in the description. And in that blog is also my affiliate link at the very bottom, which gives you access to everything. Promotions, giveaways, airdrops, contests on top of what Bybit already gives you, because with Bybit, membership has its rewards. It is the 10-Minute Contrarian Podcast, and welcome, Contrarians, to the 2025 Big Energy Predictions podcast episode for 2025. We talked in the previous predictions episodes about how my confidence this year is much lower than it was in 2024, and nowhere is it going to scrape the bottom of that confidence level like energy will be this year. It is anybody's guess as to where these things will go. And so I'll go ahead and say at the top of the show, and I've said this in the past, but I really want to take the time now while everybody's listening to reiterate it. I always buy a little bit of energy stocks somewhere when I can, because there are only so many molecules out there to be used, and when they get used up, they are gone. And the world just keeps on progressing further and further, and every time they do, you need copious amounts of energy to power all of these great advancements in technology. Everybody wants to talk about AI, nobody wants to talk about the energy to run it. Everybody wants to talk about electric cars and hybrid cars, but nobody wants to talk about the energy to run these things. That's what we do. We look where people are not looking, and we invest in the underlying assets that all of these things desperately require to function. And energy, of course, is at the heart of that. Energy is life. Without it, your life sucks. Energy is the main factor in whether or not your country is super prosperous or a country where nobody wants to visit. So when I see energy instruments, which I believe to be cheap, well then, yeah, I'm going to buy it because it's only a matter of time. Always. It never hasn't been. Now, you're going to be wrong short term and even midterm, but long term you won't be. And when you're right, you're going to be very, very right. So just remember that going forward. There should be a place for energy in everybody's portfolio. But as far as 2025 goes, what makes it so difficult, and we've been talking about this in previous predictions episodes, is the U.S. is reindustrializing while the rest of the world seems to be either stagnating or going the other way. So when it comes to investing in energy, what do you do with that? Peter Zion has made a lot of bad predictions, but he's made a lot of really good ones too. I said before, when it comes to people like this, when they play to their strengths, when they stay in the pocket, when they stay in their lane, they can be very, very good. And he said 10 years ago that the United States is going to have to double its industrial complex because, as far as other countries go, your leaders as far as industrialization, China and Germany, are going to be going offline and deindustrializing. So that void has to be filled somewhere. If it doesn't, then we start going backwards, back into the Stone Age instead of forwards. So if not the U.S., then who? I think it would be a great opportunity for a place like Southeast Asia to pick up the baton and start running with it, but what type of capacity do they have to do that right now? Maybe a little, maybe a lot, I don't know. A place like Australia could benefit from something like this, but they're stuck under a political regime that is actually more regressive than the progressive moniker they claim to fall under. So either way, it doesn't really matter what country you're backing or fading in this situation. It's a whole lot of back and forth, a whole lot of give and take, and it's really hard to pinpoint where things are going to go. Now, believe me, and I need to say this now, I think it's the appropriate place. I cannot wait, and I hope I get this right, and I hope you guys get it right too. There will be a time where the majority of the world recovers and starts building a lot of shit again. And you are going to want to be around for that. Your big miners, your base metals, copper, all of the energy needed to power this rebuild, the Aussie dollar, like you're going to want to be around and scoop up all of these things on the cheap because they are going to go bananas when this happens because they always do. And right now we are currently seeing all of these things, maybe not copper too much, but stay tuned for that. All of these things start to bottom out. Actually, I shouldn't even say bottoming out. A lot of them are just headed straight down. You know, if they're going to do a boom bust echo, they're still in the bust phase. So that, I think, is going to be a generational trade, or really a generational investment when it's time. But we're just not there yet. You know, but that begs the question, where are we? You know, maybe we'll save this for another episode. But for now, we need to start making predictions, and we are going to start with oil. Now, oil has been no fun for anybody, investors, traders, nobody, for the last couple years. And I really, if I'm going to make any kind of prediction, I think my prediction is expect all of that to change this year in 2025. Expect much more volatility. So oil traders or former oil traders, if you want to get back on the horse, might not be the worst time to do that. You know, I spoke before how the United States dollar is finally breaking out of a 2-year range. If you really go zoom out and look at most currency pairs, not involving the yen, it's like, go look at all your cross pairs. Cross pairs used to be the best place to go, and they were probably even worse than dollar pairs for the last 2 years themselves. They've all been in a range. But I would expect breakouts to happen all across the board. So oil trading and Forex trading is going to get really good again. You know, I didn't think Forex trading was that bad these last couple of years, but I think it's going to be even better going forward, as is oil. Now, which direction is oil going to go? Well, it's even more difficult because a lot of the people who I pay very close attention to in this space were going in both directions. I had really good cases for the upside. I had really good cases for the downside. Now, if you recall, too, the energy episode usually comes before the crypto episode. I flip-flopped the two this year, and serendipity, it might be a good thing that I did, because just this week, President Trump gets on the microphone and says, I really want low oil prices. And he strongly recommended that OPEC follows along with this. And the main reason why you do that, and he even said it out loud, is because dropping the prices of oil, especially dramatically, is the number one way to fuck over Russia. You know, the U.S. wants to end the war in Ukraine. Well, they do now. They didn't before, but this administration does. And the best way to have leverage going into that negotiation is to have extremely low oil prices. Now, Vladimir Putin is not a weak ding-dong like Justin Trudeau or Claudia Sheinbaum is. You can't just negotiate with them and get what you want a day later. You know, even in a position of extreme weakness, which Russia is right now, he's still going to bring it. But he's really going to have no leg to stand on if you have oil prices all the way down to $40, $50 a barrel. Now, getting OPEC on board was much easier said than done back in the day, because OPEC for the last 10 years pretty much told us to kick rocks. But if you've been paying attention these past couple weeks, the United States and Saudi Arabia are buddy-buddy again. Now, we're not having the same agreement we did before with the petrodollar, but this is more of the style of agreement that Donald Trump likes, more of a business agreement. So if I'm guessing, if I'm making a prediction, I would say expect more cooperation there, definitely more than we've been getting in the past. So I was really on the fence about oil here, contrarians, but in the past week, I have gone sharply to the downside. So I'm going to say oil down for 2025, and the goings-on from this past week in January has been the main driver of this prediction. But the big prediction there is to expect more volatility either way. We will almost certainly break out of this super, super tight range we have been in since the middle of 2022. Moving on to natural gas. Now, this, again, all of this is low confidence, but out of the four that we're talking about today, this is going to be the most confident of the bunch. And frequent listeners of the show should know exactly where I'm going with this because I've been talking about natural gas for the past 12 months. Now, to give you some history, natural gas for me has been a huge loser. I got into this over a year ago for sure, and then I added on after what I thought was a very irrational drop, and the price just kept going down. But when it started to bottom out, I came back on the show again and I said, look, I know you guys probably think I have no credibility in this space anymore, but I'm telling you, if you are not in natural gas at the moment, you should really consider it. Not financial advice, but just saying. And ever since then, it has been up only for natural gas. And the reason, after just completely eating my dick on this trade, that I actually had the audacity to come back and tell everybody, hey, this would be the time to get in. I was dead wrong before, and I lost all credibility, but I'm saying it again, everybody needs to get in the pool, was for very obvious reasons. You know, the whole reason price dropped the way it did and sentiment was as low as it was is because, Russia was still sneaking natural gas over to Europe. So that whole trade idea was demolished. And we just started producing copious amounts of it all over the world. And supply had absolutely ran past demand in a big way. But when you have an energy commodity like we have here with natural gas that is used all over the world and has not really been substituted, and you have price drop that much and then start to level out at an extremely low price, and sentiment is in the absolute toilet, and all anybody can talk about is how much oversupply we have, contrarians, this is exactly when you are supposed to fucking enter. If you are going to be somebody who buys valuable things cheaply, which I highly recommend everybody do, that is financial advice, then it has to feel like shit when you do it. If your stomach isn't turning in knots and you are dreading the possibility of something that cannot go to zero actually going to zero because you're not thinking rationally about it, well, then you, my friend, are not buying things when they're cheap because you're supposed to have that feeling. If you're feeling excited and euphoric about the thing you're buying, well, then chances are you're buying near a top or buying something that's really expensive. But fundamentally, for natural gas, demand is starting to catch up. People realize this is the cheapest, cleanest fuel out there as far as abundance goes. We'll talk about the cleanest one in a moment. But the fact that we can produce so much of it now is an exciting thing. That there's countries all over the world that worry about energy shortages, and natural gas goes a long way to making sure that there is none, or at least a lot less of it. As of right now, January 2025, it's hard to say that about most other energy sources that are a lot more scarce, or are on the way to becoming a lot more scarce. Natural gas is not, and therefore that is where a lot of people are turning to now. And as a result, price has gone up ever since I made that call. Now, in the tax loss harvesting episode, I said that I am dumping my natural gas position at a loss with the full intent of rebuying it 30 days later, which is the amount of time I have to wait in the United States to buy it again. And that's exactly what I did. I said, hopefully in that time, the price isn't going to go up because that would be a bummer. And it did, but the tax mitigation I got from that cushioned the blow quite a bit. So no regrets there. I am back in the natural gas game. Very happy to be there. And a big shout out to one of my listeners who came in and said, hey, you like the ETF UNG, and that's the one you said you're going to go back into. You might want to consider some of these other natural gas companies that perform better and actually give you a dividend, like a nice one. And I was like, holy shit, dude, you're right. And so I looked it over, and I still, after doing that, I still did like, believe it or not, the ETF that I was in before, ticker symbol UNG. So I kind of split the baby. I did half there, and I did half in one of the companies that he recommended, which, yes, does pay a very nice dividend. So if I'm going to be sitting in this trade, might as well pay me for it. We love dividends here on the show. And because I am not a signal service, especially when it comes to things non-crypto, you're going to have to do your own research on this one. But the research is not super hard to do. But either way, I am going to say a fairly confident up as far as the price goes for natural gas from today January 25th, 2025 to December 31st, 2025. Get rid of any past emotions or PTSD you may have from previous losses. Good investors don't carry those things with them. Stop being such a pussy. Natural gas up. Let's go. Over now to an old favorite on the 10-Minute Contrarian podcast, uranium. Though it has not been much of a favorite for anybody recently, which is weird, right? Like, we all know it's the answer, and we know it's going to be the answer, but I've said it before on this show too. If you're going to be a uranium investor, you have to be remarkably patient. Now, that patience should pay off in spades, as it already has a couple times for people who have been in this space for a while. A reminder for anybody who's new, I entered the space in 2020. I made a big old video on no-nonsense Forex explaining why, and my timing could not have been better because not even 2 weeks later, uranium just shot to the moon and subsided over time, but still stayed at a much higher price than where we got in. Now, I was hoping it would just continue to be up only, but that's, as we know, that's just not how energy works now, is it? Until we have a genuine shortage, and the amount of molecules out there, which is finite, by the way, just does not keep up with what we're trying to do here. These things are going to be cyclical, as is uranium. Now, this past year, people are finally realizing two things. One, the stupid climate change narrative is on its absolute last legs. It seems like Europe and Canada are the final holdouts, to where their leaders can still actually weaponize this and use it as a club to beat everybody over the head with. But everywhere else, especially the United States, and that's where the world looks to, it's damn near gone. Now, do I think there's still a place for renewables? I absolutely do, but no time soon. And we are not talking about renewables on the energy episode for 2025 for this reason. It's not a factor. But there will come a time where we need all of the molecules we can possibly produce, so it will come back into play. But we are talking about uranium here, and because this climate change narrative has gone away, this helps uranium because people still have this old PTSD from Chernobyl and 3 Mile Island and things like that, which is foolish if you actually know about energy. But people who think these things don't know anything about energy, and so they continue to freak out over things like this. Oddly enough, Microsoft, giant Microsoft, whose market cap outpaces the GDP of most countries, has decided to reopen 3 Mile Island because they realize uranium is the answer going forward. If this isn't the most bullish thing I have heard in a long time, I'm not quite sure what is. However, we did see a pump from this, but the pump was temporary. The price and the price of stocks in this sector went back down after the pump. Welcome to uranium investing. And places like 3 Mile Island and a lot of these reactors that are going back online still use Generation 2 reactors, which are still prone to melting down. Now, you would have to be a complete idiot and have a perfect combination of factors happen all at the same time for these reactors to melt down, but we did see that in our lifetime back with Fukushima. We don't expect the Japanese, of all people, to be complete boneheads when it comes to something, but they were this time. And then a perfect combination of events happened on top of it, and voila, there you have it. And that's all it takes to completely ruin an industry like the nuclear power industry for a long time. And these Generation 2 reactors are still being used when we have much more efficient and much, much, much more safe reactors in the Generation 4 modules we have now. But that being said, again, the probabilities of a meltdown with Generation 2 reactors is extremely low. And hopefully we have learned from our mistakes in the past. But this is where we are now in terms of safety. Now, all of the new countries who are building reactors right now, who have been for years, it takes a good 5+ years to build a reactor and have it come online. There, places like China and Russia and UAE are all using Generation 4, and when these reactors come up, they're going to be very efficient. And they're still going to need a lot of uranium to work. But doing what Microsoft has done and doing what China, Russia, and the UAE are doing and declaring that this is going to be the way forward is one thing. Actually putting pen to paper and uranium into the reactors is apparently another thing. And until that time comes, This shortage, which is going to be inevitable, will not have materialized yet. So when pump, is it going to be before this realization or during? I don't know. So how can I sit here and make a confident prediction for 2025? I really can't. But I guess if I had to, I would say uranium down. And remember, we used the ETF URNM for this prediction. So if you want to track where it is now, up until where it's going to be, up until the end of this year, that's the measurement we use. And the reason I would say it is because of the United States. If the reindustrialization process is going to happen there and not elsewhere, well, they have plenty of oil and natural gas to fuel it. They kind of don't need uranium. And what's the rest of the world going to use? I don't know, probably natural gas, mostly. But the rest of the world is a very big place, and it's hard to know. So, gun to my head, uranium down. Those of you who have the patience and who are not in this sector yet may want to look for good buying opportunities because they might be coming your way. I am continuing to hold my positions and may even look for opportunities to add on because I have the patience. I invest money that I'm not using, just like you're supposed to. Finishing off with copper. Quite an intriguing story for 2025, I think. Copper is. If you've been paying attention, we've been seeing quite the move up lately in the price of copper. And the reason why, to me, is interesting and funny at the same time, because it's China again. We have gone through 2 spats of China saying that they're coming back and they're putting a bunch of money into what really is themselves trying to grow again. And we have called bullshit on that on this podcast twice, and we were right both times. The money spent ended up getting completely wasted, as China likes to do. If you don't believe me, look up the Belt and Road Initiative, look up ghost cities, look up the Olympics. But now this time, they're for real this time, guys. Super serious. They are going back to, I guess, their version of quantitative easing and money printing in hopes to get things back online again, which is such a desperate attempt because, as we know, China is dying, literally and figuratively. And they really, really don't want to deindustrialize, but they have to. They just simply don't have any other choice. Math is math. Numbers are numbers. Birth rate is birth rate. And there's just no cure for this, at least not right now. So I am also calling Fugazi on this current move in copper, and I'm going to predict copper down. And China, again, is a big reason why. China, ever since we've been doing this show, and even before that, was a big hoarder of copper, and they were smart to do so. You got to give China credit where it's due. China is a country that does a lot of dumb shit and also a lot of smart shit at the same time because they are fighting for their survival. Never forget that. But recently, instead of hoarding copper, they have been selling off their copper. Perhaps to pay for this reindustrialization attempt, I don't know. But just in general, hoarding something is looked at as generally bullish, and selling it off is certainly looked at as generally bearish. And when it comes to things like this, what happens in the United States is a big deal, but what happens in China is also a really big deal, especially when it comes to copper, because it always has. The price of copper has much more to do with what happens in China than it does in the United States. So I will say copper down, and get ready, if I'm right, only if I'm right, for some really great buying opportunities because if you recall from what I said before, my 2, 5, and 10-year predictions for what is going to be the one asset you're going to want to hold is in order. For 2 years, it was Bitcoin. I made this prediction 2 years ago, right about. So nailed that one. 5 years, I said silver. And then 10 years, I said copper. And copper is really going to be the one you do not want to miss, in my opinion. So I would say no matter where price is, my recommendation, again, not financial advice, I keep having to say that. I know it's irritating, but put yourself in my position, please. My recommendation here is to absolutely make sure you have some exposure to copper somewhere in your portfolio, regardless of where price currently is. If you wait for this big dip, and the big dip never comes, you are not going to be on this ride. And I'm telling you, I think this ride is going to be next level extraordinary. The need for copper in the future does not match up at all with the amount we are able to get out of the ground now or in the future. It takes a decade for a new copper mine to go online. The youngest copper mine in existence in the world right now I think is over 40 years old. Your two biggest producers are basket cases who love socialism. And copper, like silver, is just irreplaceable for what it does. You can go down to aluminum and get a much worse version of copper. But if you think aluminum is going to be enough to provide the electrification of the world and the backing behind AI and everything else, got some bad news for you. Copper's it, contrarians. But as far as what happens in 2025, if I had to make a decision, if I had to pick, I'm saying the price will go down this year. Wish me luck. I'm going to need it. But thank you for joining us here at the big Energy Predictions episode 2025. It's an episode I always love doing, even if it seems like this year I was wincing and cringing a lot. I certainly was. But don't forget, energy is life, energy is necessary, and energy always goes up at some point. So if you have the patience, and everybody here should have the patience, then you are certainly going to want to look to buy on dips, especially large ones, and then just have the immaculate patience to wait it out, because I think more than anything we invest in here on the show, the definition applies of us maybe seeming like we're all crazy, but we are not crazy. We are just very early.